Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, June 30th, 2021. We're going to start out, take a quick look at the broad markets, very brief, and then follow up on some of the recently highlighted trade ideas. That'll include lumber, the grains, wheat, some others there, and cocoa, and gold. I haven't done an update in gold in a while, so we'll take a quick look at that in the U.S. dollar. So it won't be too long. We're going to focus on just a handful of trade ideas here. Broad market, same story, nothing happening lately, but we watch. It's usually from these periods of low volatility that come big moves. So you can see price compression lately, small candles. That's the daily chart of QQQ. Here's what I'm watching. We zoom in on the 60-minute chart. You look for these divergent highs and divergent lows. Divergent high correction, divergent low rally, divergent high correction, divergent low rally, divergent high correction will be next. And when it'll come, well, on the 60-minute chart of QQQ, this is my primary trend line right here. Let me thicken that up a little bit just so it stands out. There's the primary uptrend line that comes off the May 19th low. And I have a little minor trend line here that quite likely, if it gets taken out, conviction will bring us down to that primary trend line, and then that's the one we need to take out. When you look at the futures on NQ, you can see the same thing. I have it here. This is also a 60-minute chart, and we zoom in nice and tight, and you can see the trend line has quite a few reactions. That's the primary uptrend line right there off the same low, and quite a few reactions. And then here's that minor uptrend line right there. Divergences continue to build. We're making equal or lower highs on the indicators with higher high-end prices. And that's it. You can see my levels. I believe these are the levels I've already covered. 14,313 is the first support, then 14,066, and then 13,737 or so. And then ultimately, I think probably work our way back down here at about that 13,376 to 13,455 or so support zone down there. And here's what SPY, the S&P 500, looks like on the 60-minute chart. We continue to diverge. These are your divergence lines right there, and these are the divergence lines on the indicators. So we actually had consistent divergence on the PPO down there, but the RSI just put in a higher high, a new high, and it actually did so with an extreme overbought reading. If you can see down there, well above, we came in at a reading of about the RSI right there was about 77, and that's the most or actually that's the first time. This is, I should say, because we're still up there. First time we've crossed that 70 level since we didn't hit it here, right here. That was the last time we were oversold on the 60-minute RSI. Time before that was right there, and these are your corrections that immediately followed after those. Those were just single taps. Actually, that one we stayed up there a little bit. You had some divergence. So I wanted to point that out. We're overbought. I don't have a clean up trend line, that you want to wait for the sell signals, but either way, with the divergences, they most likely will play out sooner than later. So that's what it looks like on the SPY. And then let's look at ES, and we'll move on. ES, if I can find that chart. Okay, let me pause the video. I've got so many charts going down here. There we go. All right, this is a 60-minute chart of ES, the S&P 500 E-mini futures. There's your rising wedge. We already had a breakdown here and a correction. It ended down here. We got oversold at the time. I don't have my lines up. The 30 levels right about there. Extreme oversold is usually around 20. That's usually where the S&P on the 60-minute chart the buyers will step in if you hit that extreme oversold. And so what we have now, oh, excuse me, I accidentally hit the pause button. What we have here is a divergence forming. Right there is your RSI divergence, and we have the PPO divergence there. So you can see the targets here, pullback targets, if and when we get reversal anytime soon. It means if we go higher, then you just have to add additional targets. 42.23, then 42.06. We already hit that one there. That target was hit on the way down. Let's move on, because again, right now, at least as of today, there's just not any opportunities. This is a slow grind in the equity markets. So where the opportunities lie? They still lie in, I believe, lumber. I still very much like lumber. Lumber's down today, but very much like in this one. And you can see this is a 60-minute chart. I'm going to loop over to the daily chart after this. There's our downtrend line that was taken out and back tested. We still back test it. These divergences continue to build. You can see since the last update, we were over here yesterday, somewhere in there. We came down. We tested so far successfully tested that previous low right there. And that extends these positive divergences. PPO starting to curl up here, and I'm going to show you two other charts. We're going to loop over to a daily chart right here. Look at daily candles. LP again, lumber futures. Right here you have some reaction. You have that reaction low there, those candles there. So that is support that right about where we hit today. Call it, give or take. The low I think was 725. I have that line around 736. Sometimes 736. Sometimes you'll slice through it. Should they get taken out, 626 is your next support, and it's pretty good support. You have a reaction high back here, and then a big old gap right there. However, there's a pretty steep downtrend line, and when that pops, I think we're going to get a rally up to those targets I gave you on that 60-minute chart a minute ago. And then lumber futures, remember this one is an end-of-day chart, so that's that low from the other day right there, and that's what we hit again today. It's about at 725. And I mentioned here there's a confluence of support. This is a gap in here, two gaps actually back here. There's one gap right there and another gap right there, and that's the bottom of the gap. So those are gaps once entered are typically backfilled, and as I mentioned yesterday, I like it all the way down here to but not below 650 or so right there, and that's also this previous reaction high. So again, to zoom in, I know this one might be hard to see. Let me roll this like this, zoom in with my browser, move over here. Nope, you're still off the screen there. Let me do this. There we go, and now I can zoom in a little bit more. Okay, now you can see it. All right, this is the area I'm talking about right here. So we have support all the way here, down there to the bottom of the gap. Should that go, we can get down there, but remember, as I said yesterday, we are pretty darn oversold on lumber futures. It's been about now close to a 60% drop in just a matter of less than 2 months from the highs. And there are your previous oversold readings. Right there, and there. They're all circled. And you can see above what happened to lumber after that. And remember, in many cases here, that one was an 18% rally from this point to this point. That oversold reading, well, it was triple digits well up. It's measured up higher on the chart. This one here was a 20% rally right there, and then the bottom came in a much larger rally. And again, this is the first time we've been oversold since that reading there. And remember, that 20% rally was just the initial rally. We put in a marginal new low with positive divergence, just as we did back here, positive divergence. So we could get that. If it repeats, it'll be that. Sometimes it's one and done. You just have to keep that in mind. And lumber, like most other commodities, has it dropped, almost 60% in a couple months? Yes, it's also, that was predicted. Big sharp drop after these parabolic runs. And but the bottom line is when you take a step back and look at this chart again like this, longer term, you can see that, and this is what I've been maintaining, this is all a long-term basing pattern right here. And we broke out. This is a breakout. And like most commodities, they've broken out to multi-year highs. There is a lot of evidence that I've been posting and talking about that these rallies are more indicative of the beginning of a new bull market. They've already too many previous bear market highs, reaction highs were taken out to say this is a continuation or a bear market rally. Again, a lot of evidence supports to a new bull market in commodities underway, and if that proves to be the case, and we continue to see higher highs in the coming months to years, then you want to buy these pullbacks. And again, this one, there's not a hard buy signal. It's not a hard support zone. I mentioned that lumber's very volatile, and it was down pretty good today. But I like it more at these levels than I did the other day. So let's just look at that one more time, then I'll move on. Hourly candles right there, and again, this 60-minute chart, helps to make the case that we'll probably rally sooner than later with these divergences building, especially if they can hold that previous low and rally this tomorrow. I added a resistance level here about 853.60 or so right there, but this is still my first target zone from about 901 or 902 up to about 934, and then T2 zone 111 up to about 192. And should it get there now, that would be, the top of the zone is about 61%, the bottom of that zone is about 51%, and just a pop to the first target zone is about a 25% gain if we get that. And that, by the way, would mesh when I was showing you on the daily chart. If we do have another leg down in lumber, and then put in a divergent low on that daily chart, that would be one trade there. So many ways to trade it. You can either, take profits when you get up there or raise your stops. Unfortunately, unlike a lot of other futures contracts like the stock indexes, lumber doesn't trade 24/7, so you are prone or subject to gaps, opening gaps. Trading hours, I think, are 10 a.m. Eastern to 4 p.m. Eastern time, somewhere around there. Okay, just an update to wheat. I posted wheat today. An update. This was covered yesterday in the video as a trade setup and went on to break out. We put in a marginal new low since yesterday, just one additional low. It extended the divergences, and then boom. See, these divergences is like, stored energy, if you will, coiled spring. The bigger they get, the more energy is building. Negative divergences you want to look for, are usually followed by a correction. Positive divergences, like down here, followed by a rally. And vice versa. Here was a big top down there, divergent highs. So simple stuff, and that's why, one reason, again, case was made also on the daily chart, to be long or get ready to be long, and then we had our buy signal today, and it was impulsive, by the way. So I expect more upside. I expect my second target at minimum to be hit, and also, once again, wheat, corn, soybeans, those are the big grains, as well as most other commodities, are in a bull market. So it's quite possible that this could be the beginning to the leg to the new highs, to the next leg up in the bull market. At this point in time, again, if you're swing trading, you want to get in, get out, that 716, 674, that's the next target. You might want to sell a little bit below that. We hit that first target today to the button, consolidate. We had a little bit of a pullback as expected. That's why I list multiple targets. The initial tag of each target will typically produce a reaction. And but we powered on through there, and we're above it now. So this opens the door, and it is an objective entry right here. If it's still trading 680, and for that swing up to that next target there, about 1717 and change. And I also covered wheat. Again, I posted this update today, but this is the same levels in the video yesterday. 673, that target was hit, followed by a reaction. You can see that candle right there. We pulled back after a perfect tag. We hit it to the button. That was a high right there on that first 60-minute candle today when we ramped up. I'm sorry, yeah, that was the 1 p.m. candle. And hit it exactly 673, pulled back, consolidated under there, and boom, broke out. So there's your next objective long entry. If you took the breakout or if you missed it because it was too quick, well, this is also an objective entry right here as I'm doing the video. And the next target there on this wheat chart is 688. But you also want to, that's, let me give you another target here, because I think we'll easily work our way up to here right there. And that's about, we'll call that $7, $6.99. I'm going to round it up to $7. Even number. You might want to set your sell limit order a few pennies below that, but I think that's quite possible. And keep an eye on that wheat daily chart as well, or the wheat 60-minute chart, and the daily. I had wheat pulling back to support on the daily as well. So a lot of reasons to be long wheat, and I do expect more upside. But like any trade, don't let it get away from you. Just set stops in line with what your price target is and what your trading objective is. Are you a swing trader, an investor, trend trader? And then keep in mind that I always say this, wheat and corn move hand in hand. They're alternative grains, and one goes up, the other goes up, one goes down, the other goes down almost always. So here's corn up 6.5% today, and soybeans, that's the other, grain. They're not, as closely related, but they tend to move together. So these are not coincidence, these big green candles today. They all popped at the same time. Looks like a little bit of bull flagging action right now in SOYB, that's soybeans, ETN. And the way a bull flag works, should that prove to be what it is, you have an impulsive move called the flagpole, followed by that flag formation on declining volume. And then you take the flagpole, the length of the flagpole, add it to the bottom of the flag, and that gives your measured target, which probably come in right around these highs. So if you want a target for SOYB, if that flag, what you want to see is an impulsive breakout. So that'll probably happen when these things pick back up. Yeah, I know wheat's already stopped trading for the day. I think soybeans too. And you know, the ETNs will trade. That's a little tricky. You might wonder, hey, Randy, I bought wheat and I'm able to buy it, but why is it kind of flatlining here? Well, again, because the futures stopped trading in the afternoon before the 4 p.m. bell in the market, and this is an ETN. It's going to keep trading, so you can continue to buy this one, but you really should know what wheat futures are doing if you're going to go into these guys. Let me just show you the futures then. Speaking of that, ZS, soybeans, there's that pop in soybeans. Here's some targets. Minimum, I think we'll get up here to that 1430. That's my first resistance right there. And next resistance or target there about 1469 or so. And let's look at corn, and then we'll move on. I need ZC. Here we go, ZC. And there it is. There's that big pop in corn, as you can see, right there, up to that 599 mark or so, and took out the downtrend line. Just like wheat, it had a divergent low, positive divergence, and you can see all the other divergence. Divergent high, correction, divergent low, rally, divergent high, correction. Simple stuff. And probably target that previous reaction high. I'll have to study this chart a little more to give you some targets. But again, you want to be open to the fact that this could be the beginning of the next leg up if you're a longer term investor. Let me go back to that wheat daily chart and corn here. Wheat daily chart. Remember, this was the support right here, and I covered that in the video. We've been bouncing here about that 634 level, 634, 634. So as I said yesterday, even before the big rip today, you could have positioned long at support, and then boom, you're up almost 5% today. And again, being that it's in a bull market, maybe the next run up. If not, at the very least, you can swing trade it and game these rips and dips. Corn daily chart, still above the primary uptrend line. So again, this is my point, is these guys are in a bull trend, in a bullish trend. You want to buy pullbacks to support, and that's where corn was the other day at 1917. It's been great support recently. If it takes another leg down, it has trend line support just below it as well. Ideally, for the longer term case, you want to see these previous highs get taken out, and that should certainly propel corn even higher. And then SOYB, soybeans. Soybeans broke the trend line here. It pulled back to support 2149 right there, or 2150 we'll call it, and bounced up, and it just hit this trend line here. These are the soybean futures. So this is the soybean ETN, SOYB. I'll have to look at the futures and see if I have a comparable trend line. I put much higher weighting on what the futures are doing than these ETNs, but they do a pretty good job of tracking. And again, if you don't have a futures account or the capital or the know-how to trade futures contracts, nothing wrong with trading these ETNs. And CC cocoa, this is a different one. It's not in the it's not going to move with corn and soybeans and wheat. In fact, I should have mentioned that earlier. I've mentioned a lot. JJG is your grain ETN. So if you want to trade corn and soybeans and wheat, you can just go to JJG. As you can see here, it mirrored their move today because that's what it holds. It holds corn, soybeans, and wheat. So there's another ETN option for you. And actually, we had that was a trading range right there, and that's where it pulled back to pretty much recently, is the top of that trading range. PPO is curling up down from low levels. Oversold. I say this all the time. Oversold in a bull market, in a bull trend, is usually one and done, very fleeting. That's when you want to go long. You want to be long oversold readings. In fact, the very bottom, that was a multi-year bear market end, beginning of a bull market, and JJG came with an oversold the last time we were oversold, as a matter of fact, and that was last June. So there it is. A lot of reasons to be long the grains recently and right now. And yesterday, I believe I included cocoa as well, NIB, Here's your downtrend line right there. Support about 28.26. Positive divergence here on the daily chart. Could very well be the catalyst for the next leg up. NIB is your ETN that tracks it, or futures traders will trade that CC. I covered CC, or your cocoa futures. Broke out above the downtrend line, breakout back test. First target 24.47, second target 25.03. And that's it. We'll keep this video relatively short right here at the 20-minute mark. I'll wrap it up and continue to look for new trade ideas and update those that continue to stand out. This has been Randy Finney with Right Side of the Chart. You have a great day.